Stocks just had their worst day in 3 months. What is going on with the stock market? Why is it reacting like this? Is there no more Santa Claus rally? What does this mean for your money? We'll talk all about this. So in just the past 3 days, we've gone from pure elation when the market gapped up 3% in pre-market thanks to a cooler than expected inflation report to this. How did this happen to us? So let's put everything that's been going on this year first into context and see what this means when it comes to the Fed's most recent moves. And then we'll talk about the stock market going forward and why we might have some further downside to go. So inflation has been plaguing the entire global markets for the past year now, with inflation steadily above 7% for a long time. This is in relation to when inflation was at 2%, at 1%, or even near 0% inflation. And we've gone from easy money policies from the Fed, printing money by the trillions and charging 0% interest rates, to now, in the span of just a couple of months this year, we've gone from 0% interest rates to now 4.5%. And here's where the news comes in. So on Tuesday, we got a great inflation report where 7.1% is now great, but that is lower than expectations of 7.3%. And for a while, we were consistently overshooting on inflation. So to see it actually being a little cooler than expected is kind of cool. So the markets rallied like crazy in the beginning. In pre-market, the Nasdaq was up as much as 5%. The S&P 500 was over 3% higher. Everything seemed like sunshine and rainbows, and maybe we could finally break out of this downtrend that has been plaguing the market all year. We've been consistently making lower highs and lower lows, and finally, maybe, yes, we're gonna go above 4,100 on the S&P 500 and go on a Santa Claus rally like no tomorrow. Santa, please give me those presents. Yes. No. So we sold off on the news pretty bad. We still ended up positive on that day, but well off the highs. And then the following day, Papa Powell killed us. Now, by the initial headlines, it seemed that everything worked out in our favor. A 50 basis point hike. The Fed is finally listening to us and saying that we need to go a little bit slower on the rate hikes, not 75 basis points. We only need 50 right now. Maybe we need 25 next year, and that's it. Yeah, no. The Fed broke news that they're actually planning to raise interest rates up to 5.1% by next year. Which is still in line with, kind of what we were talking about. They might have gone a little bit lower, but okay, 5.1%. But the thing is that they are going to hold at 5.1% through 2023 into 2024. No rate cuts expected. And that's really what kind of spooked the market here. We thought that maybe the Fed might raise another 25 basis points and then start cutting at some point next year. But now they're saying 50 next year. Plus, they're going to hold it at that level. Some people are still hoping for a soft landing. There will probably be some sort of a recession here, right? But we really don't know what exactly is going to be the consequences because everything is so delayed. Do know that the longer you stay restrictive with your monetary policy, the worse the economy probably gets. It's going to cool down. People are not going to borrow as much money. The economy is going to contract. And we already know, based on the Fed, that GDP growth for next year is 0.5% expected. I mean, there will be more layoffs and higher unemployment after this. It's almost guaranteed. When companies see higher rates and not a good environment for growth, they're going to scale back like they've been doing this year already. You see a lot of layoffs in the tech industry. This could be a contagion that spreads to other industries as well and generally raise unemployment. Looking at past recessions, we know that this is kind of the playbook, and this may not be doomsday because the market is generally ahead of the time when it comes to the economic cycle. So if you look at 2008, 2009, for example, the market bottomed March 2009. That's actually almost 1 year ahead of unemployment peaking. So unemployment went up to almost 10% here later that year. So the market continued to rally even though those bad things were happening because the market often prices in what they believe to be 6 to 12 months into the future. As long as they have visibility into what companies are going to make in the future, people are willing to buy into that ahead of time. So if we know that 2024 could be the launching pad for the Fed lowering rates and maybe we start to see some growth again, and so 2023, is that going to be a good year for the market? It could be. There's so much up in the air right now that we don't really know, but I personally don't believe that we're going to make significantly lower lows in the stock market. I think that we might have seen the bottom already on the S&P 500 at 3,500. If you look at their earnings over the past year, they've actually been decent. A lot of companies are still making good money. And actually in the third quarter, you do see some companies already making a turnaround. The market right now trades at a forward PE ratio also around 17, which is not horribly expensive at all. So as long as earnings do not absolutely collapse, I don't think that it warrants an exceptionally lower valuation here. A lot of tech companies have corrected and are trading at more reasonable prices. Meta trades at like a 15 PE ratio. Even Tesla right now trades at a 45 PE ratio, which is the lowest it's been in years and years and years and years now. Other sectors, you are still seeing some pretty fair valuations out there. Home builders, energy, utilities, financials still look really strong, even though there's been a lot of concerns about the consumer. Dividend stocks are another area that has been performing very well throughout the year, all things considered. And looking at the trends of inflation, you see that shelter prices are going down, used car prices are going down, energy prices. Oil is actually lower than it was at the beginning of this year, mind you, which is absolutely, crazy to think about. So all of these prices have been coming down, and we're starting to see that in the actual CPI reports as well. So I think that this is going to be a trend that's going to improve. And as long as there is improvement, I think that there's something that investors can latch onto and the Fed can latch onto. And hopefully this time the Fed actually knows what they're doing and they're not going to make it worse and worse and worse in 2023. So now that I have that recap and rant out of the way, let's take a look at some of the charts here on the S&P 500 to break this down even more and see where the market is heading potentially for the rest of this year and into 2023. So here we have a chart of the S&P 500, and you can see I've drawn out these levels here. You can see there's been a 50% retracement from the bottom of the pandemic low of around 2,200 and all the way up to the high around 4,800. We can see that the low we made this year was 3,500, correlating to that 50% mark. Pretty remarkable. And we've been trading in this really, really technical way. So the market has been in a downtrend all year, pretty much since the first day of the year. And we've just been crashing and crashing and crashing, making new lows after new lows and lower highs as well, you can see here. And unfortunately, we've continued that trend the fourth time here, 2 times in the recent history over the past month. And it's unmistakable right now that the action is pretty bearish. I mean, over this year, throughout this bear market, we haven't had a move higher above the 200 moving average here. You can see that this has been an area of staunch resistance. I'm going to zoom in a little bit more so you can see, right? That yellow line there, I'm going to circle that as well. This yellow line has acted as resistance on top of that upper trend line. And again, we almost did it here. We closed above that line, but then we just wasn't able to hold that move. Again, gapped up here, and we weren't able to hold that move. Double top ugly pattern there as well. So it's not looking too good for bulls. And in just the past 3 days, we've fallen pretty precipitously, down 6% in 3 days on the S&P 500. It's worse on the NASDAQ, about 10% from that gap up that we had in pre-market of that inflation report to now. Really, really nasty move in just a short amount of time. We're now sandwiched between that 200-day moving average and a 50-day moving average. Whenever we cross below the 200, that's bearish. If we were to break down from the 50 as well, that would be even more bearish. Every time we've gone from a peak and we broke down from the 50-day moving average, we've seen a huge move lower, as you can see right here back in April. We saw that as well from the August to October decline. And if we were to see that again, that would be pretty nasty. I mean, we don't know where exactly this settles. It might retest the low at 3,500. It could go down even more to 3,000 if things were to get really ugly. Again, I personally don't think that given the fundamentals we have right now, it warrants going all the way back down to new lows. But who knows, we might retest this low or at least this one at 3,700. All right, now looking at a weekly chart to get rid of some noise here, and you can see again a really nasty bearish candle here, blow off top. And on the weekly chart here, we're looking at this potentially going down to the 200 week moving average, which is this yellow line right here at about 36.58. He dropped to this level back in September, and over the course of a 3-week period kind of wrestled with that this 200 week moving average before bouncing back and making this bull run. So having gone through that technical analysis of the S&P 500, I do want to point out some tips that may be helpful for you when you're trading. Beyond the S&P 500, there still are some great stock charts out there that could be potential trades for you even when the market's going down. Some of these stocks could be going up, showing relative strength. I recently did a trade on Lennar for call options on this breakout above the $90 level, and then it's worked out well. It hit a high of almost 95 today. You can get all those trades in real time, by the way, like the one I did for Lennar, by checking out the StockDads Discord. This is our premium community with real-time alerts for stocks, options, crypto, sports betting, and more. Everything from short-term day trading to long-term investing, we've got you covered. We also have daily live streams, video courses, everything that you want to know about trading and investing, and of course, not to mention our one-on-one mentorship program. Check it out, link in the description. Other ones in the solar space have also been a bull market this year. Some of them are up tremendously. And then you have ones like Tesla. So Tesla has been in a defined downtrend all year. You can see the chart here. And if this one breaks down from the lower end of this trend, I think this could keep going down towards 100, as ugly as that would be. And Tesla already hit its lowest level in about 2 years here, since 2020. If you're buying and holding and investing for the long term, in my personal opinion, I think right now you still want to invest in profitable companies, ones that are similarly valued to the overall market, if not slightly undervalued, like a Perion, and companies that, if they're profitable, are still growing at rates that are faster than the overall market. So with that being said, hope you guys got a lot of value out of this video. I know the stock market is really scary right now, and this time of year was supposed to be so festive and joyful, and we're not having it, at least so it seems so far in December. But there's still time, and we still have a lot of time to invest into 2023, into the next decade, into the rest of our lives, because we are trying to build generational wealth for the long term. If you're interested in learning more about trading and investing and get real-time alerts and be part of a like-minded community of traders and investors, make sure to check out the StockDads Discord. I have it linked in the description, or you can go to stockdads.com. Good luck, stay safe, be well, and I will see you in the next video.